Uh, so hello everybody, it's Mark Littlewood from Business of Software. Delighted to be joined today by a very long-term attendee from Business of Software conference, both US, Europe and online. It's James Avery, who 6 months ago would say he was from Adzerk, but now he's from Kevel. So let's welcome James.
Hey Mark, how's it going?
It's really good, James, and so nice to see your cheery face. Where are you, and how are you surviving lockdown?
Yeah, we decided to take a little break of lockdown. Of course, like everybody else, we've been stuck in our house, working from home. Kids are going to school from home, but we decided to rent a house down at the beach. We live in North Carolina, so we're down at a North Carolina beach in the winter, which is actually surprisingly nice. It's not as cold as you might think, and it's pretty relaxing to work by the ocean. And if we have to be stuck at home, might as well be somewhere kind of fun and interesting.
Yeah, well, I'm sure get to the implications of remote working and working from home and where home is later on. But can you give us a little bit of background about yourself? Where you came from and how you came to start Adzerk, and just talk us through what Adzerk's been doing over the years, because it's another one of those overnight sensations, right?
Yeah, overnight, meaning I think, when did I start working on it was 2007, which I now realize is 13 years ago, which feels like a very long time. But it's gone by pretty quickly. Back in like 2007, 2008 timeframe, I actually acquired a small ad network. So this was focused on software developers, specifically like .NET software developers. This very small ad network. I ran those ad networks for a couple of years and realized that it's a terrible business. Like, it's essentially just sales and a constant churn of sales, because you're just, you sell this month and then you got to sell the next month and then you got to sell the next month. And I realized I really didn't want to run these businesses. And I was a software developer before. So I'd been building all my own software to run these ad networks. And I realized that software was so much more valuable than, the ad networks I was running. So I sold off the ad networks, not for a lot of money, but basically enough to like be able to focus on the software.
Yeah.
And this was actually, so it was around 2009 that I actually like started the company that became Adzerk. Right around when I went to my first Business of Software in San Francisco.
Wow,
2009.
That's very timely.
But yeah, so like started it back in 2009. It took a little while to like actually get a real customer of Adzerk, the software to kind of run, display advertising and things like that. And then, so in 2010, we got our first customer. In 2011, we raised money. So we raised like a seed round, and really on the idea of like, oh, we can really accelerate and be off to the races. And that wasn't what happened, right? Like, we raised money and it's kind of like, we thought like, or I thought, right, like raising money, like once I can hire a salesperson, once I can hire, a bunch of other people, like things will really just accelerate. But they really didn't. They kind of, just started growing slowly and gradually, right? And just this slow, gradual growth. And we also learned that kind of the market we're in wasn't the best. Like, we were targeting people doing kind of traditional display advertising, which, is pretty much dominated by Google. And so it took us years, like a couple years later, we realized that our APIs is why we were signing customers. The customers who signed with us, like, wanted to use our APIs.
Yeah.
So we started to kind of, lean into that. And then that led to a couple more years of, working on the APIs, getting more and more customers on the APIs. And then we realized we'd been like underselling our product by 1,000 times, like really selling it way too cheap. Which actually reminds me of a good like Joel Spolsky thing that I went to at Boss one year, where he's just like, just double your price, like everybody in the room. Like, he's like, just double it. And there's always so much fear around doing that, but then when you do it, it usually works out very well.
Something that Patrick Campbell's, Patrick McKenzie's always saying as well, and that's his like number one You have to increase your prices until people stop
scream.
buying.
And then, so that, that gets up to like 2016, 17. We hadn't raised any more money. We got back to profitability. I kind of started to feel, I think Boss is always interesting, right? Because you have people who've raised money, but then you also have a really strong culture of bootstrappers, right? And like the people who are very against raising money. And so I started to feel more at home there, with the, maybe I raised a little bit of money, but now we're break even. We're growing we're growing profitably. And then we started to sell like big enterprises. So like in 2016, 17, like we closed like Ticketmaster and Bed Bath and Beyond and
Wow.
All these like large customers, and realized that we really had a big opportunity. How do we keep growing this? How do we keep scaling? And so it was about 2019 when I said, hey, like we should really, we should probably raise money. Like, and I think especially for like the Boss audience where half of it is very anti raising money, I think we raised money for the right reason, which was we couldn't keep up with the growth and like the people that wanted to use us.
Yeah.
Especially in like a SaaS business where it's like, okay, we sign a customer, it's like usually about 3 months or so for us to like get a customer signed. And then there's like a couple months where they're like on ramping and learning how to use the product and getting ready to launch, right? And then they launch, and and then we send their their first invoice. Maybe they've already had it, but then they maybe pay 30 days later.
Yeah.
And so it's like a 6-month lag between when we make that first conversation. Maybe you're spending money on marketing or whatever, and then 6 months until we get a check in the bank. Yeah. And so doing it profitably, it's like you're really always just 6 months behind.
Yeah, so it's an interesting thing with the Boss crowd, and some people do say it's very anti-VC or investment, and I think some people are. It's a broad church, but I think that most people understand the difference between raising money because you've got something that you can grow and scale, and there's a reason for doing it, and as opposed to starting a business where the principal driver is raising money and then you kind of work out what you're doing. And I think it's a pretty business focused thing. Yeah. It's been quite entertaining over the years, actually. There've been a lot of people. I mean, I remember Joel's talks about never taking money and what a terrible idea it was until he took money.
Right. Well, that's why I think it comes like everything else, right? It's like this scenario of there's good reasons to take money and there's bad reasons to take money. Yeah. And I think like the one thing I do love about Boss is that they don't, like, I always, bugs me when there's like a big celebration around raising money, because that doesn't really do anything, right? Like that's not, I think Boss is much more of like, hey, let's celebrate when you hit your first million. Let's celebrate when you hit 10 million. Let's celebrate when you hit 50 million. Like, let's not, the fact that you raised 10 million doesn't mean anything yet, which is very true, right? Like it's just, it just raises the expectations of what you're going to do.
Yeah. I mean, there's an adage that celebrating raising money is like a chef celebrating being given the ingredients for their cooking, but actually it's been given the money to go and buy the ingredients. You can still go and buy some terrible ingredients. If you're me, you can mess them up. So it's interesting. So so when you were raising money first or not in the first tranche, because presumably that was an angel round. Was that friends and family?
Well, my friends and family don't have any money, so it was other people's friends and family.
So what was that a significant amount, or?
So the first time we raised, it was like 650,000, which was more than it is now because it was in 2011, right? Like that was your average kind of seed round back then, probably. And then we ended up raising a little bit more along the way, just from the same investors, just basically to stay alive, right? Like we took another million, I think, over the next like 2 or 3 years before we could get to profitability.
Right. And were those difficult conversations going back to the
They weren't too
work?
bad. I mean, we kept showing traction and we kept showing growth. And so, for the current investors, like for the most part, they were pretty happy to write another check. I'd say some more than others. That's the one thing people don't realize. Like I saw somebody recently do a round with 30 angels in it, and I'm like, they're not going to move as one, right? Like you can have a handful of angels that are really upset that you're raising more money or that you haven't gotten to where you said. You have some that are super excited about where you're going. And so it's really, they're all unique individuals and they're all going to act independently.
Yeah. Interesting. So you took some debt?
Yeah, we did. It was a couple of years ago. We worked with Lighter Capital, who actually I think is, I think I've said before they should be sponsoring Boss, because it was good for us because it wasn't a lot of debt, and really it was to really help close that gap a little bit on the accounts receivable side.
Yeah.
When you look at it, you just say, oh, if we could access, $1 million of this accounts receivable that we have sitting out there now, that would help us grow a lot faster, and you can do it at a much, decent interest rate.
And were you considering equity finance at the same time? Did you weigh up the pros and cons? What were your...
We weren't. The thing for equity with me, and this is the other thing I think is interesting to talk about is, I think when you talk to some people at Boss, a big reason they're not a fan of the kind of VC model is what I always like to, is people will talk about, I don't know if I stole this from somebody or if I came up with it, right? But they're trying to launch rockets, right? And they're like, we're gonna launch 10 rockets. One of them's gonna get to the moon, and that's great because we're on all 10 rockets.
Yeah.
But I'm on one rocket, right?
Yeah.
And if that rocket blows up on the launch pad or whatever, that doesn't work for me. And so that's the VC model that I think a lot of people at Boss have a hard time with. But one of the things when I realized that we might raise money again is I realized I didn't want to raise from that traditional kind of VC group. There are other options once you get to a certain size.
Yeah.
And so we were big enough that we were basically looking at, okay, how do we, the debt was kind of bridging us to the numbers we needed to go raise from kind of the more growth equity. They're kind of, between private equity and venture capital is kind of this growth equity range where, their goal is every company is successful. Now, some are a 3x for them, and some are a 10x, and some are a 5x. But they don't model it like VCs where it's a bunch of zeros and a 1,000.
Yeah. No, that makes sense. So for your debt, was that something? I mean, how was it structured? Was that something that you could pay down, or do you still?
Oh yeah, no, we paid it off. We paid it off as part of this fundraising. But I mean, we did a couple things with Lighter. The first time we did more of a kind of a term loan, really, and so you can kind of have a term loan and just pay it back at a wouldn't say it's not the interest rate you're going to get buying a new house, but it's not credit card interest rate either.
Yeah.
And then we switched to where it actually was a lot better, which I highly recommend, which was just a line of credit. So it's just a line of credit we could use when we needed, and pay a lot less interest over time doing that.
Great. So tell me about the fundraising, Mr. Chef. How did you get the money for those ingredients?
I started in kind of fall of 2019. So I said, I realized, okay, I think we do want to raise money. Talked with the board, they agreed, and started going out to the kind of companies.
Just back up a second. So you just tell us where the business was at that point, because you're based in Raleigh, and that's your headquarters, but you expanded into various other markets. How many people were in the company? What were they doing?
Yeah, so actually our headquarters is Durham, but I live in Raleigh, but they're real close to each other. So, but people would correct me if
It's America.
so I mean, so we had about 30, America. So we had about 30 it's about 30 people at the time. And we had kind of really started to already embrace remote working. Like we had the team in Durham, which is about half the team. The rest were, we had a 3 in San Francisco and like a small office there. We had 3 in London. And then we had a lot of people that were just remote, right? Just working in random US states. And honestly, one of the guys in London lives far enough outside London that he never goes in, right? He doesn't need to do his job. So while he's quote unquote London, he's probably an hour away on the train.
That's anywhere in London to anywhere else in London, though. That's one of the reasons I don't live there, right? And what were those people doing? What was the kind of split of functions?
Yeah, so we've usually been about half and half when we look at like product engineering and then sales, marketing, operations, and then overhead, which is what I call myself in the budget. So yeah, I mean, it was we've always tried to be pretty engineering product heavy, just because we are, we're built for developers and product managers, and so we have to really keep up with everything that's going on and making sure we can really support them. Gotcha. I always think there's a couple different types of products, right? There's like the sales driven product, and there's like the product engineering driven product. And we've always tried to be the product engineering driven product, just because that's where I think I'm more skilled and less so on the sales side, right? You can find some guys out there or gals like have a simple tool that they just sell into the ground, right? It's like 5 engineers, 50 salespeople. And it feels, maybe it's a lot easier, but I guess the grass is always greener on the other
side. Excellent. So what was the thinking behind the fundraising?
Yeah, I mean, really a couple goals was, one was to raise money, from a group who understood what we were doing, wasn't looking for a 0 or a 100x, but was looking to help us really be successful. And then it was to accelerate what we were currently doing. We weren't looking to pivot. We weren't looking to really dramatically change how we ran the business. We wanted to keep, I wanted to keep running the business. We wanted to keep the board, the people we had on the board for 5 years. We wanted them to be able to stay, obviously adding new people for the new investors. But the parameters were raise, it was between, 5 and 10 million, raise enough for a couple years of runway to really accelerate with sales and marketing, also continue to grow engineering and product. I like to call it seed strapped. This is a term I'm trying to get out there. Yeah. Right? We weren't bootstrapped, because that's a very, clear definition of what bootstrapped is. But we were seed strapped. Like, we'd raised a seed round, gotten to profitability. And when you do that, just like bootstrapping, you need more resources everywhere. Like, everything is you're behind everywhere, right? And so people ask, like, specifically, where do we want to invest? It's like everywhere. We need to invest everywhere, because when you're running bootstrapped or seed strapped, like, everything needs more resources.
Yeah, I love the concept of seed strapped. Is that something that I haven't heard it before, I have to say? So
I invented
it. You're just you invented it. Excellent. I shall steal it and credit myself relentlessly.
Yes, totally fine.
No, that's great. I love it. Okay. So you were looking 5 or 10 million. Was that a difficult number to raise? People always say that the hardest number to raise is what you're actually raising, and they talk about the kind of investment gaps. But
no, it wasn't too bad. Like, it was right around, I mean, obviously, like, we talked to, some like growth equity groups, and actually it was a really good way to eliminate the ones we didn't really want to work with right now. Because someone would say, oh, our minimum check size is 30 million. And I'm like, yeah, like, that's not the size company we are. Like, it doesn't make sense for us to raise that much money. And then 2, those, I think a lot of times, if they're doing those kind of checks in the size company we are, like, they're trying to buy a majority. They're trying to control it. They're trying to roll it up. They're trying to do those sort of things where,
you out, Jim.
Yeah, I'd just be I'd come join the team. I'd be that guy volunteering at the boss conferences to earn my way in.
What can you say about in terms of kind of finances of the business when you were raising? I mean, what sort of revenue were you running? It was profitable.
Yep, I'd say break even, right?
Right.
I think profitable assumes like you're actually like generating some sort of real profits. Our goal was always to run it at just break even and put every dollar we could back into growth. As far as like revenue wise, like, we're like close to 10 million a year in revenue. So like right in that range where, it's interesting because we don't fit into like the traditional VC route anymore either, right? Because like this is technically our A round, but nowadays an A round in VC is like somebody doing, $1 million in revenue. And so we kind of fit more in like what would be a traditional like B round, right? Like B round of VC, but then they're usually investing in companies that raised a 15 million Series A. And so that company is like 4 million in revenue, but they grew from that, like, it was a year and a half ago, they were at 0. And so that wasn't us either, right? Like we really did this long, slow kind of ramp over time. Not slow, but not like venture speed.
There are different measures there are different metrics, I think, that VCs will use for different types of companies and different markets. And revenue is a great metric, particularly if you're running your own thing. But there's plenty of land grabs and all sorts of other strategies out there.
Well, that's what I'd say too, is like, I was going to say growth rate is the more important metric right now to most people. Like they care more. They would rather see you at $1 million in revenue, and you grew that over the last 6 months than to see you at 2 million that you grew over the last 18 months.
So how did you go about choosing the VCs? You talked a little bit about, some of them are obviously too big, they're too early, they're the wrong thing. Presumably there's like a pool of kind of Goldilocks people that are the right sort of people. How did you decide who you wanted to work with?
So we went through, you're right, like tons of conversations, some people too big, some people too small. Identified, I think it ended up about 10 or 12 of ones that felt really good in the sweet spot, like investing in the type of companies we wanted to see, the right amounts, kind of the right approach, right? Like minority stake, not majority. And so we went like pretty deep with those 10 or 12, right? Like you share every bit of information you've ever had about your company and things like this. And then ended up getting, it was 2 term sheets in Q1 of 2020, which is great. Like you want to get at least 2, right? Because then you have some competition. And then COVID hit. So right when we were at the finish line of our planned fundraise, I was watching the stock market, right? Drops like 10% a day for like a period. Every day goes to lockdown. Essentially everybody we've been talking to was kind of like, hey, like let's see what happens. Right. So it wasn't like, hey, like we hadn't gotten to the point where it was kind of like the point of no return, or we'd like made a commitment. It was kind of like we could, there were still a lot of options on the table, but everybody was like, hey, let's see what happens.
We love your business, but who knows what's going to happen in marketing departments with advertising.
Well, and I think too, like even just any most of the firms that you talk to, like there was definitely like that 1 or 2 month period where they were just like they were, I think some of them were unsure if their investors were going to keep writing checks, right? Like there was just really like nobody knew. Like it's crazy now, like 9 months later or whatever, how crazy the stock market and everything has gone, and the sentiment of the world. To remember that like 9 months ago, everybody was having those conversations of like, well, like what if this is it?
So it was all iced?
Yeah, so basically everything just got slowed down, right? So it was like I think we were kind of marching towards the finish line of the process. Everything got slowed down, but we got lucky in that, after that first kind of couple month period of where everything slowed down, like things picked back up pretty quickly.
Mm.
We actually picked up another term sheet, and then we ended up doing the deal back in the summer. So we just announced it, but we actually did the deal back in August. So managed to get the deal done still with the firm that we liked the best out of the one that we had multiple term sheets. And I think what it came down to was just, it wasn't like raw terms. Like I think we could have gotten slightly better terms potentially, or we had some slightly better terms on the table, but it was finding the group that we thought would really be a good like partner for the business. Now there's no illusions, right? They're still an investor. They still have to, they have to make their return, but also really seem to understand what we were trying to do.
Yeah.
And that was the key thing, was just understanding that we want to be this development platform, that we want to be an API, that we're going to make decisions that lean towards that may not be the decision that makes the most money in the next 8 months, but it's going to be the decision that makes the most money in the next 8 years.
Yeah. And what's their expectation, or what discussions have you had in terms of them realizing their investment? I guess one of the things about going into growth capital is that there are a number of options open to you, traditional IPO routes and potentially trade sales, or being sold on to another private equity firm. But they want to get a return at some point. What's their general strategy?
Yeah, I mean, I think they, like you said, right? Like they need to get a return at some point. One thing I love too is that the guys we raised with are more, they're a little more patient than some in the growth equity world, right? Like they don't have a 3-year horizon. It's longer than that. But yeah, there's tons of options, right? I mean, my preference would be IPO, right? Like one day we IPO. But then also, if it comes time to where they need to realize, their investment, and we're not ready to do that, then you always can go. You just go to the next person up the chain, right? You just go to the larger growth equity group, or the larger, or the smaller private equity group, and you sell part of the business. We still don't have to sell all of it, but could provide a return to investors.
Yeah, very interesting. And at the point that the institutional investors came in, what happened to the angels? Are they still in? Were they putting more in? Did they have an exit or a partial exit? Did they?
Yeah, so
some of them have been in there for a long time now, James.
Long time. They've been some of them for like 9 years. Yeah, we did provide a exit for the people who wanted to. So a lot of the angels, like individuals, were like, "Hey, man, I'll let it ride. Like, you guys are doing good work. Like, why sell now? I want to be there when you get huge." Some of the funds, like this is where you kind of get back into like fund life and things like that. Some of them were like, "Hey, like we did this 9 years ago. Like we've got to close out because our fund is 10 years old." So they exited when they could. And then angels who put a lot of money in could, sold some part of it, which I think is great too, right? Like they can realize some gains and not have to, wait another, 5 or 10 years.
Yeah, no, that makes perfect sense. So you've been going for a long time. We have this thing that we call a boss number, and the higher someone's boss number, the more we like them, obviously. The boss number correlates to the number of conferences they've been to, and you're in the teens, which is pretty cool. You've been coming very regularly to the US event and also to the European one. Thank you for your support, but I guess you're not like an investor. You're not doing that for just to be nice to me. What do you get out of the conference?
Yeah, it's like, so I have to go. There's some conferences I have to go to for work, right? Like they're the ones where you're going to meet people and things like that, and that's work, right? And then Boss has always been like the one conference I go to for kind of me. And I think there's like a couple reasons, which is one, I always tell people that I never leave a conference without at least like one tactical thing I'm going to go home, go back to the business and do. Right. And a lot of times it's 2 or 3, but there's always at least one where I'm like, that's exactly what we should be doing. I remember one good one was like the culture map that it was a couple years back, 3 or 4 years back, probably.
Alex Osterwalder.
Yeah, Alex Osterwalder, who kind of put everybody through this culture map. And he always makes everybody work, right? Which some people grumble about, but he always puts the audience to work. But we did this culture map, and I realized like, this was kind of earlier on in the Adzerk, we're like 15 people. I was like, I love where our culture is right now, but how do we keep that as we go, as we start to double and then continue to scale? And so kind of using that culture map and working through it with the team, like we were able to really, identify things we loved about our culture and that we wanted to keep while we scaled. I think it's gone pretty well. But then I think the other part is like, so there's like the tactical part of Boss, which is, part of how I justify paying for it from the business, right? Like it always pays off. It's a good ROI for the company. But then the other part is I feel like there's a part that's kind of like motivation and like therapy, right? Like I feel like I go to Boss, and when I leave, I'm always more excited than when I came. Like excited to go back and work on the company and continue to grow and continue to scale it. Like it's recharging. And I think like for that, a big part of it is, there's the community, like they're seeing the same, a lot of the same people every year, talking to people. But honestly, the thing that really recharges me the most is hearing like founder stories, right? Like when, whether it's like Peldy talking about the good or bad of what's going on at Balsamic, right? Or it's Dharmesh talking about like, here's how things have been going at HubSpot, or here's these things we learned. Like those stories really just recharge me and, inspire me more than anything. And I think that's like it's like a top off every year of the kind of, the battery that you need to like keep doing this day in, day out.
Yeah, it's interesting. I mean, that's something that a lot of people say. I think, most conferences would claim that that's one of the things that they bring, but you can really sense that and feel that at the conference. I mean, certainly in the at the physical events, that's a very big part of why people find it valuable. Although I've been quite surprised this year, to be honest, how much people have enjoyed spending time, all on working from home and spending time on Zoom and doing things with family or work colleagues, and actually just spending some time and having a chat with people that are not directly impacting on your own business, but have some things in common. I think is really powerful. So
no, I love the virtual conference this year. I'd still miss the in-person, so one day I really hope to be back to an in-person Boss conference. But
us too. I mean, it's a lot of work. It's a lot of work putting together, obviously, but it's amazing how much energy we get out of it, and how nice it is to see people and just spend time with them. And I think that's something that we're all missing to a greater or lesser extent. But those times will come back, and honestly, I think probably not in 2021. I think there's this sort of big thing around. We'll see how long it takes to roll vaccines out, and how all of that goes. But there is something potentially risky about an international gathering of people that are prepared to sit on an aeroplane for however many hours to all get together and then hang out. So we're very focused on making things work online, and can't wait. I mean, it's been horrible for us as conference organizers, but it's also been a great opportunity. And I'd say that at the beginning of this, we took a pretty long-term view of it, and I slightly tried to put a brave face on, probably not very successfully. Oh, this is a great opportunity to, um, I think we'll have a much stronger business as a result of it. I think we've been pretty lucky to maintain the quality of people in the networks, and that has a value in and of itself. And we've also learned some, there are some things that just work really beautifully online in a way that you can't get in a physical event. But not lobsters, they don't come jumping out there.
But I think, but it's a good point, because I think people who maybe wouldn't take the leap to go to Boston or Cambridge will do an online event, and then they're going to see how great it is, and then 2022 can be the blowout, boss. I mean, I know you don't want to make it huge, but I think it'd be great. It'll be a lot of energy of people coming back for the first time, and people who maybe have done virtual for a year or two now, and like get to actually go to one in person. I think it'll be fun. But yeah, I remember at the beginning of COVID, I was signed up for the European boss. When was that supposed to be, like the last week of March?
22nd, 23rd of March. So the difference between 22nd and 23rd of March is that on the 22nd, the UK wasn't in lockdown, and on the 23rd, it was.
Well, I kept saying, like, everything was happening. I kept telling my wife, I'm like, if Mark does it, like, I'll be there. And she's like, you can't leave the country in the middle of a pandemic. I'm like, look, like, if I trust Mark, if he thinks it's safe, I'll put my life in his hands. But thankfully, I didn't get stuck in.
That's why I made the decision to put. Couldn't take the responsibility.
Why I'm not living in your shed right now, because if I'd come over there, I'd have moved in, and you'd have me there too.
You're always welcome in Motor Shed. So excellent. Look, what have been the kind of big, not pivotal moments, because they've come to mean something else, but some of the big points in the growth of your company where you've had to make decisions, and obviously raising funds is one, but are there any particular kind of points in the development of the business where you've had to make big decisions, and bonus points if bosses helped you think them through?
Yeah, it's funny. I thought about actually trying to, like, I'll do this one day, maybe on the plane to the next in-person boss event, but to like map out the boss conferences versus like where the company was at a given time. And I can't even remember all the ones I've been to. I've got to like dig through my Gmail and stuff and find like the tickets and things like that, because they the years blend together. But it was interesting because it really was like the first boss I went to in 2009 was when I decided, like, I've got to get off the ad network business and I want to start this as a software company. And that was a really interesting conference because it's the only one I went to in San Francisco. It was a very different crowd, right? Because it's a San Francisco crowd. The speakers were like Paul Graham and people like that. But it really
people wearing toe shoes.
Yeah. And it made me want to focus more on the software side of things and not the ad network side of things. It really showed me the potential, and like and I knew it to some extent, but I think like seeing all those things reinforced. But I remember one of the pivotal talks I saw at Boss, and kind of tied to where Adzerk was at the time, was like we raised money in 2011, like started scaling, and it was just going so slow. Right. And it was just like, and it's like, this can't be normal, right? It should be, we do something and the graph just shoots up and to the right. And it was Gail Goodman's talk, which is probably one of your most watched like previous talks. Yeah. But the kind of long, slow ramp of death. And the best thing she said in that was, she's like, we all sit around and we'd say, if we did X, it would like cause that number to go. We'd go like this, and then that wouldn't work. So we do Y, and Y would make it go like this. No, and like Z make it no. But she was like, every little thing was just a degree, and so that's how I had to start thinking about the business. Was just nothing we do necessarily is going to like really turn the curve from 40% growth to 140% growth, right? But like if we can do something to turn it from 40% to 42%, and then 42% to 44%, like those things just compound over time. and it's a growth rate. So if we can keep up that growth rate and keep growing, then that's really the secret to, I think, like a good SaaS business. And so that was a pretty pivotal one. And then, you know, I think that over the years, so actually this is another good one, is that as part of this fundraise, we rebranded. Like, we rebranded as Kevel. So we're no longer Adzerk. We're now Kevel. And why did we do that? Well, you know, a big part of it was around, you know, Adzerk sounded like an ad network. And we started ourselves kind of behind of where, you know, where we want to be in people's minds. And I think, you know, part of that comes from, you know, I think one of the best speakers you've had in the last couple of years is April Dunford, and her talks about positioning. And where she talks about positioning, it's not as much about the brand and your name, right? It's like where you're positioning yourself in the market. But it really got myself and my VP of marketing thinking just about positioning a lot more, right? We both read the book. I saw her speak again at the virtual conference. And when you start to think so much about like where does your company live in your customer's mind, then we realized that, hey, like this small thing, which is just the name of the company, which if you talk to April, she'll probably say it doesn't really matter. But like the name of the company was just putting us in the like wrong quadrant to begin with, right? Like in their mind, they were thinking ad network, ad tech. And what we're trying to tell them is that, no, we're an API focused company, you know, on, you know, monetization, right? Like in April speak, right? It's like we are an ad server, but we've layered on the API and the developer tools is what's differentiating us from all these other ad servers, right? And so it was just starting us off on the wrong foot, and we thought we were better off with a name that really doesn't, you know, mean anything, but, you know, just gives us a blank slate so that we can, you know, decide how, you know, or try to help our customers see us in a certain way, as opposed to them starting out kind of on this wrong foot.
I think April's got shares in Call Quick or something. The number of companies I know that have ended up changing their name and changing their branding, and you know, as part of a much bigger thing, I think is scary. So tell us a little bit about the rebranding and how that's been, because that's quite a it's quite a big thing for you. It's not going to mean anything to the people that don't know you yet. They'll hopefully it will just make more sense to them. But has there been any pushback? Have there been any things you've been surprised about in the company? How do you get people to refer to the company as the right company internally?
Well, that's still I'm still gonna do that for years. Call it the wrong thing. But it's also okay. Like I think it's like, one, I'd say like the effort of doing the rebrand was like this Herculean effort that my VP of marketing, Chris, who's been to a couple Boss conferences, you know, he took on, right? And like everything from, it's just the amount of stuff you don't think about that has your company name in it, right? Like every SaaS app you use, like how do you switch over email? Like how do you do it in a way that doesn't disrupt things? Communication to customers, communication to investors, communication to, you know, all these different constituents, you know, partners that you have. It's like huge effort. So we're glad to be on the other side of it now. There's still, of course, there's always going to be little things that you have to like clean up. Now all of like our old shirts are collector's items, you know, like that's the pitch to but yeah, I mean, it's like it's a ton of work, but I think it's gone really smoothly so far. So like we're pretty happy with it. And I think that like the feedback we got in the market, right, was nobody was like, oh, I love the name Adzerk. Everybody was like, oh, good. You know, so it was never, you know, it was never the best name we could have come up with. You know, sometimes you get saddled with the name you randomly register just because you're lazy and you don't want to come up with another name. And you say, oh, well, my consulting company was called InfoZerk, and my my networks were called Zerk Media, and so just throw an ad in front of it, right? And then 10 years later, you're like, well, why did we do this?
I hear you. Fantastic. Well, look, really nice to catch up. What are your what are your hopes? What are your hopes? What are your fears for 2021? And what's the
Yeah,
best thing that's come out of 2020 for you?
the
I'm
best thing that's come out of
always big on the
2020.
positives.
Well, I mean, I think closing the fundraise and things would be the big best thing for me. Yeah, because I really miss traveling. I cannot wait to, my main goal in 2021 is to be able to travel somewhere. As soon as I can get a vaccine and whatever card I need, I'll be in London or San Francisco or New York the next week, or whenever they say you're allowed to travel. I want to get in trouble here.
Have your salespeople found not doing customer visits a big challenge? Have they adapted? Have they?
Yeah, I think for a lot of the deals, it doesn't really matter. Like a lot of the deals, we wouldn't really do a customer visit anyway, right? Like if they're smaller, or especially if they're in, some, pretty remote location, remote to us.
Yeah.
But I think it has slowed down. I think it slows down the larger enterprise deals where there really was a lot of benefit in saying, less so of like the, like steak dinner sales, and more of the, hey, let's get, we'll get 3 of us in a room, all your stakeholders in a room, and spend 3 hours kind of going through how you're going to build your ad platform, what you need, how to work, whiteboard things. Like those kind of things I think they'd take a month out of the sales process, right? Because you can do in 3 hours in person with a bunch of people, and then lunch in between or whatever. Like you can get so much done and really like show what kind of partner we are. Whereas when you're doing it all through Zoom, like sure, it's really useful, and we can still do it. I think it just takes longer. It takes longer to like wrangle people and get them in the room and get the right people on the calls, and to like keep that momentum.
Yeah, it's interesting. That's interesting. And what are you excited about in 2021? And what's the thing at the back of your mind that's worrying you for next year?
Yeah, I mean, the thing I'm most excited about, right, is getting back to any level of normalcy. We canceled we had an all hands. We try to do 2 all hands a year where everybody comes back. We have a lot of remote workers. Ours was scheduled for like early April, which we canceled. And so we actually have about 10, no, it's probably 20 people, 15, I don't know, 15 people at this point who work for me that I've never met in real life.
Wow.
And so the thing I'm most
That's why they're
excited about
still
is
with
that,
you, of course, James, right?
yeah, no, I know. They don't know in person that, but like, I can't wait for that first all hands when we can get everybody back into one place, have a lot of fun, meet a lot of people for the first time. I mean, we have a product manager. She started, I want to say like March 1st. I've been working with her for 9 months, and we've never met in person. And I feel like I've met her, right? Because we talk on Zoom all the time. But I think that's the thing I'm most looking forward to in 2021. And then kind of the other side, like with the fears, right? Like I think there's plenty of things that worry me, but I don't know. I don't live a lot with fear. I kind of roll with the punches, and I know that there's going to be bad stuff that happens in 2021, whether it's losing a deal or a customer or having somebody leave. But it's just part of it. Gotten used to it by now.
Yeah. Well, that's all part of being the CEO and being the ever-smiling entrepreneur and leader and all the rest of it. So I guess it goes with the territory. But I think you've got a pretty
it's the
pretty sunny disposition.
Yeah, but it's the resilience. Like I think Boss speaks a lot to that. When I talk about like the difference of the, you said like some conferences, say they like motivate you and things like that, but like they try to motivate you with, the guy who comes up and says everything went great and we sold for this much money and blah blah blah. Like
you can be a billionaire too.
Worst, most useless talks, right? Like I think like I don't remember like there's every once in a while you'll have somebody speak or whatever, and like it's just all too sunny, and you're like, yes, this isn't right. It's like what you really want is like you want somebody up there is like, here's all the terrible things that happened
Yeah.
along the way, because it's kind of it's relatable, right? It's like what we
It's
all go through. It's like
relatable.
there's all these. That was the other, like, remember one of Peldy's talks, you know, he was talking about that graph of, you know, the entrepreneurs like year, you know, or whatever, right? Where it's like
Oh,
you have like
do
this
worry,
like
be happy.
low and then this high and
Yeah.
then this like medium. Then the best part was he's like, but if you zoom in, this graph is made up of all other the same thing, right? It's like every day is that, every hour could be that. And I think that's the message that, you know, one of the overriding messages from Boss that you can take away, right? Is that like lots of bad shit's gonna happen, lots of good shit's gonna happen, but at the end of the day, it's like that persistence of making
Yeah.
it through.